Hi, everyone. Let's have a great week. Ren, Kevin, how you guys doing? Hope you had a good weekend. Twilight Zone football, still good to see, even though the stands are empty. Hi, Shepherd. Okay, so what's the theme of the week? Hello, Hugo. What's everyone waiting on this week? Come on, you guys know. That's right. Okay, so um, when we had this day in the S&Ps, when this was happening, you already heard from Fed president that the Fed had something ready to go that they were going to announce on this first break on this correction here. Okay, so S&Ps are up, dollars lower, so people are already trying to front run what the Fed may do. Okay, so you would think that the obvious trade is, sells a dollar clarity. Clarity in the Fed is an oxymoron. So, obvious trades, short dollar, long precious metals, long equities. Okay, thank you, Arena. I think there'll be a short too. I don't think it's here yet, but it could be. So, there was an old timer, even older than me, who used to say this, Joe Granville. What is most obvious is obviously wrong. So we'll see what happens here with the Fed this week. Off the gun, my observation is we're getting a little bit of a correction in Euro pound. This was the star of the week. It was a rocket ship. Interestingly enough, when you look at, let me move your, okay, I figured that was you, Ziggy. All right, so on the 4 hour, we almost got to the 78.6 level of this whole decline that we had here. So, starting to see some stall where the euro's only up 20 and the pound, which got decimated, is up 78. I thought I'd have a chance for perhaps a third drive formation. Still possible. Here's one, here's two. So I'll be paying attention at the 78.6 level for a possible third drive, although it's starting to lose its symmetry if it does it. But I'll be watching um, 9309. It's about 80 pips from here. I don't know if we're going to get up there. Yeah, I thought that we would have a pop in the pound. That would be part of it. And just didn't know it would start from Sunday night. I have no idea what Brexit risk is. I haven't since the vote, and I still don't. Um, this is another obvious trade for the Fed that maybe we'll get this gold breakout here. We touched both major support and then tried to break out. I think it was Thursday or Friday. It was Thursday, and that didn't happen. Right, kind of a false breakout. We'll see if it can do it here. Maybe I'll adjust the line a little bit. It's up here. Although it did look like a false breakout here. I'll just leave it where it was. So pretty close to breaking out there over 1950. It's going to look pretty good. So this too would be so what I'm thinking is that maybe something that isn't a layup happens after the Fed. So not looking to do a lot prior, maybe scalp around a little bit. And I could see how people would say this is just maybe an A, and this is a B, and we have a C to come in the dollar here. But one thing that is more certain than that is if we start trading over 94, this 94 level is going to be really big if we get back above it. So right now it looks like the dollar might be vulnerable to take out the low. If you notice here, we held the 50% retrace. No reason we can't go to the 61.8 at 92.40. I'll have to take a look at some off numbers here. Oil, I can't short. I'm almost tempted on one more low to try something counter trend there, similar to, the pound being decimated. Well, so has WTI. And, we still have the yen in no man's land right here, even though we're down 18. But we're getting closer to the downside breakdown, and that would be 105.63. I was looking at yields this weekend. I think they're up a little bit, but when I look at this, I don't know, maybe it's a tough call. I think we'll get some movement here in the Fed. We'll see what happens. A little stronger in the 30-year. VIX, surprising all we had was this, and now here we are again. Was kind of thinking there might be one more wave. So if you did some type of fib retracement, I bet you're about halfway back. So we'll see. This may have been the high of this move, but why can't we correct this decline in VIX? And I think that's about all I'm going to cover. Gold is starting to pop pretty good here. So I think that's what's going on here today is that people are expecting um, some firepower, new firepower, uh, with the Fed adding some more, mm, juice to the system this week. Surprised they're going to use up more when we really haven't had much more than a 7%, 5% correction. But it looks like people are going to try and idea for FX traders, US dollar yen. And what is that? To short it? What do you think, in arena coming out to the downside here? Okay. So I'll be on the lookout if we get one more rally in euro pound. Oh, what did I do? I don't want to do that. There. Okay. And Aussie, has failed a couple of times up here at 61.8. It actually, the commodity currencies, the Aussies, the only one in the negative today. And I believe that we have some pips on that. Think that Greg is short. You guys want to know what Greg is doing right now, or Andre or Blake? This is how you do it. Okay, here's our twice a year promo. Two for one, 6 months for the price of four, 12 months for the price of seven. Excellent deals if you want to join our community and make an investment in your trading and hang out with some great traders and members chat. This is what you need to do. And also, the guys will be talking about the summit coming up at the end of the month. Okay, so I know I tease you, so I'll show it to you. I don't need the data flash. There's some active pot. So here's Grega, short from 72.65, looking for 70, stops over 380, still alive. Blakers, um, still long. Canada being patient there and short. Kiwi yen So there you go. There's a couple of pattern in plays for you guys that aren't members, and perhaps you're ready to go. Can't go into election with stocks correcting. Yeah, well, that's why we could get this correction over by, you know, the end of this month, early October, and then be rallying into the election, which is a possibility. I just don't think the correction in S&Ps are that it's complete. I think there's one more shoe to drop. This is really why. Okay, you've had a 1 and a 2 here. I actually think that we might even trade all the way down to do or die in the S&Ps. It's 3,200. Although there's another speed line that I think is worth paying attention to, and that's right here. These two lows. So going to be watching these. Both of these take the S&P down to new lows for the correction. And I think we're going to get new lows before we get new highs. I don't short it here. The S&Ps, no. Maybe up here. I'm kind of thinking that we're going to front run the Fed. Traders are going to front run the Fed, and I've discovered. I don't know about you guys. Sunday nights when I do something, and Monday seem to be not as successful as if I wait for things to set up into Tuesday, Wednesday, Thursday. Okay. And then Friday, usually you don't do much besides book squaring unless we have an NFP. And then there's something to react to on a Friday. So, mainly the meat of the week is when I look to make my moves. And that's Tuesday through Thursday. So nothing I'm doing today. Maybe tomorrow, see what kind of follow through we get from today's action tomorrow. I hope that helps you guys. Okay. And we have Blake in here. If you watch his week ahead video, you don't have to be here. If you didn't, you better be here. So I didn't. Blake, I have a note from my mom.
Wait, you didn't watch the week ahead video?
No, I have a note from my mom. I had to
Watch
find a
football.
photographer all weekend.
Oh, come on. I mean, all you did is you watched
And there
football.
was football. I tried to watch during halftime from
All
a
right.
few
Well,
games. All right.
it was the first weekend of football, and it was nice to have football back. That's for sure.
Wasn't it? Even in the twilight zone,
Yeah.
football's still good to have. Yeah.
Look, the
All right.
Arizona Cardinals won. They beat the 49ers. That made my football weekend.
All right. Yeah. So
It
we
did.
have some sense of an abnormal normalcy with cardboard cutouts in the stands.
Yeah, speaking of which, of normalcy, I actually, if you guys didn't catch it on Twitter, I went out to dinner with my wife. We celebrated our 17-year anniversary, and I
Wow.
actually went out to a restaurant. We haven't been out to a restaurant since February, so to an
What was
actual
it like?
restaurant. I'm sorry.
What was it like?
It was nice. Well, we sat outside, and it
Yeah.
was at an old historic um, uh, hotel in Paradise Valley called the Hermosa Inn.
Oh, I know it.
And
Yeah. Nice.
and so we ate out on their restaurant is outdoor seating, and it was a nice night, and it was great just to be out and about, and you wear a mask to your table, and you just you eat. And it's
Yeah.
nice that we were actually at a point where our kids can stay home and watch themselves while we go out to eat. So that's a big draw too, and we haven't been able to do that up until
Happy
really.
anniversary, Blake. You're
Thank you.
one of your best trades of your life.
Yeah, right,
Happy
exactly.
anniversary.
Yeah, no, it really is. She's an amazing woman, and so I'm very fortunate to
She's got to be to put up with you, don't you think?
Telling you, yeah, telling you. So anyway, we're this week, as I did put the week ahead video together a little early, in anticipation of not being in front of the computer on Sunday, as we celebrated our anniversary on Saturday night. Um, you know, we're really all looking towards the FOMC this week, and as I pointed out, we have to expect a more dovish Fed. I mean I mean, what are we expecting? A hawkish FOMC? No, of course we're not.
Yeah.
We're expecting a Fed who's going to keep rates at zero until probably until I retire. Give me another 15 years in the markets, and the Fed's going to just keep rates zero until then. And so that means what? The S&P goes up to 10,000, and the dollar goes to zero, basically. I'm joking. All jokes aside, though, but what the market is expecting is a Fed that is going to keep rates low and stay dovish. And so, what does that do to the dollar? And the question, as I pointed out on the week ahead video, is it already factored in to the dollar and what we're seeing right now? And I would venture to guess that a lot of it is. So the upside that you would see in like the euro dollar or in the cable or in the Aussie or something like that is going to be very limited. So you have to be careful about being too bearish the dollar, because the market is already expecting a dovish Fed. It's not like they're going to be dovish, and everybody expects them to be dovish. All right, so the fact of the matter is you just have to be a little bit more careful with what you're seeing here, and we are seeing a lot of potential developments that really have raised my eyebrows in the currency market. And one of them specifically is what gold's doing. You look at gold, and gold's already kind of signaling to us that what we've seen the last several months is tired. The market's a little tired, and you can see gold is below the rising trend line from the lows that we put down in March. And I mean, we're just kind of challenging this other trend line here. I'm going to write all this down right now anyway. So we're going to have resistance as we approach the 1965 level, which is the previous spike high right here. And I think that's going to offer us some pretty good resistance for today. As you guys know, 1900 is really key support. I mean, bottom line, it is key support. And as long as we're above there, you can't be bearish gold. But I'm looking more towards, Wednesday. If for some reason gold, breaks down and it breaks through that 1900 level, it is a very bearish event for the precious metal, which would actually be very bullish to the dollar. And I know it's hard to, it's hard to imagine, wait a second, how is the dollar going to be bullish following the FOMC? Again, expectations are for rock bottom dovishness from the Fed across the board. Every bank expects a very dovish Fed. So what's the risk? The risk is that you have a Federal Reserve that says, we expect growth to stay fairly sluggish, but it's not as bad as we originally thought. You get something like that. Gold's going to be trading at 1,800, and the euro dollar is going to be trading at 116 within 2-3 days. So again, those are the risks. I'm not saying I expect that, but this is where you start getting upended if you get too directional in the market, in my opinion. All right, so that's what kind of gold looks like. Let's take a look at the euro. Speaking of the euro dollar, the euro holding 117.50. That was a big hold last week. We talked about it. You know, the reason why it actually rallied the day before the ECB is because that Reuters article, it came out and said, hey, you know, ECB members are not going to be that dovish. And, you know, following the ECB, you know, we spiked up to 119.10 and then we eased off because everybody knew, you know, so everybody knew that that was happening and, you know, it eased off. I think 119.10 is going to still offer great resistance. It's a 618 retracement. So if we get up there, you know, probably think about being on the short side of that if you can. And we're gonna keep it bullish for now while we're above 117.50. But as you guys know, this is critical support now. Okay. Previous channel. I'll also notice that we're, you know, especially if we don't, you know, make new highs here, we're making lower highs. So just think about that. Cables bounce back, nice little recovery, but we are below this broken trend line. So, matter of fact, hold on really quick. Okay, I just closed out some cable shorts here. I shorted it as it was up here in the mid, well, 77, I think is where I shorted it. So I shorted some cable here. And if you, I told the guys in the chat room I was just covering it up for like 10 because as you can see, we're up against this underside of this trend line, which is noted. So careful with longs. You can see it. So careful with longs. And so I shorted it. And I was telling the people in the chat room, like, hey, I just shorted a little bit, just kind of scalping around. I wanted out of it so I can, you know, sit here with you guys and not focus on it so much. But I do think that previous support right here is acting as current resistance, which is, you know, noted on the analysis on Forex Analytics. The underside of the trend line comes in around 129. So 129 should really offer some pretty key resistance today. Now, I don't want to be bearish yet, but man, I tell you, this cable, when we came out of the ascending wedge, you know, we're holding above the 200-day moving average. I think, you know, if we get below the 200-day moving average, it does turn bearish. But for right now, we're going to stay range bound. If we break above 129, this previous support comes in at 129.80. I'm going to mark that down too. Okay. Support will be, I'm going to just write down the 200-day moving average, which comes in at 127.40. If you guys are new to the face webinar, I try to do this bias chart for you guys every day. Okay. So just so you guys know that this is like a process that we go through every day. And the reason why we do that is we're trying to, you know, find out what the key levels of interest are ahead of, you know, the trading day, whether we're bullish or bearish or, you know, in a range. It doesn't mean you have to trade in that direction. You just know where the path of least resistance is going to be for the currency pair. A lot of times, you know, we might be in a very bullish trend, but I'll trade against it. And knowing that I'm counter trend, all it does is just, you know, signals to me that I just need to be a little bit more careful or take smaller positions, you know. So let's take a look at the Aussie. As you can see in the Aussie, we obviously have this, you know, ascending channel. We're really struggling though. The Aussie's been really struggling up here, and I'm going to mark down the same levels that I had, I believe, on Friday, which would be 73.10 is resistance, 72 cents is support, and I'm going to keep it range bound because we may be in a slightly ascending channel, but you know, oops, 73.10. The fact of the matter is if you're sitting here, you know, buying the Aussie on these dips, you know, it's a very frustrating trade right now, right? It's very okay. You know and you know, being on the short side is probably equally frustrating. That's why we keep it in a range. But anyway, Kiwi. 618 retracement in the New Zealand dollar comes in at 67.19, very similar to the Aussie, by the way. 66 cents is the support. Range as well. Dollar Canadian, although I want to flip this to bullish because we are above this downsloping trend line, this and this, descending channel, we're above it. So it should be bullish, but the fact of the matter is it's not going to rally without, the dollar actually has to make a move. So I'm just going to have to keep it on range for now. One of the things that you have to take into consideration with the dollar Canadian is how weak crude is. And crude, while we're below $38, looks like we're going, a lot lower. So, that's just something to keep in mind. So the dollar Canadian dips to the previous channel support, which is going to come in at 113.20 or 131.20. Sorry, 120 should offer support. We also have, I think today's low is like 131.50. Yeah, I mean, that's going to be, also near-term support. Yeah, a couple levels of support down below. This one's going to be key. That's why I put an asterisk there, as if, it's more significant. Okay. Resistance is going to be Friday's highs. I think it's 132 or 132.10, but this resistance right here is 132.08. I'm just going to write down 132.10. That's good resistance. Should cap us today. Unless we see some bigger moves in equities are what's driving all of our volatility in the currency market. So unless we see a big move in the equity markets, I'm not expecting a big move in the currency markets ahead of the Fed this week. So if you're making if you're trading and you've got a 10 or 15, 20 pip profit and you don't expect on holding that position, scalp in and out of it, make a few pips. Like I'm holding a core dollar Canadian long because I'm looking at it more as a big base, big inverted head and shoulder pattern. Look at it like this, if you will. So I want to keep a core position because, I'm looking at it more like this. And I think we're going back to the 200-day moving average over time. So, but if you're not looking to sit in something for a while, then, take 10 pips, move along, wait till post FOMC, and then you'll probably have a little bit better idea of what you want to do. All right, let's go to working down here. Dollar Mex. Dollar Mex is extremely heavy, and we're trading below the 618 retracement. 127% extension of this move. The low here to the high comes in at basically 21. It's 20.99. So I'm going to write down 21 as being key support. It is bearish, and we have to and we have to stay bearish while we are below 21.50, which comes in right here. And then the 200-day moving average is really 21.57. So actually that should be the number that we write down for today. 21.57 while we're below that. And you can see rallies to 21.50 already capping, the any rally in the dollar Mex. This is an hourly chart, but we'd have to get all the way back above 21.57, which is the 200-day moving average right there. Okay. All right. Dollar Swiss. Once again, 92.50 or 90.50, 92. You guys already know these numbers because we see them every day. Whoops. 90.50. And we are bearish while we're below 92.50. Not just 92 cents, 92.50. Because remember, this is a broken trend line here. And you can see how just we're constantly being rejected. All right. So while we're below 92.50, we have to stay bearish. But it looks like we're trying to build a base too. So US dollar, Norwegian krona, 920, as we marked up last week. That rejected us big time. We knew that was going to be a big level because that was the previous support. Support now is going to be, dips down to 892, but I think we'll find support before that. We'll write that down though. 893, 920. We're going to keep it in range. And you know what? We're going to put it in bearish. It's bearish while we're still below 920. But like the Swissy, this is building this is trying to build a nice little base here too. And we could be building a big inverted head and shoulder pattern, as long as that holds. But I mean, I'm leaning more bullish towards the US dollar, Norwegian krona. One of the reasons why is because of crude oil too, because crude's so weak. Okay. Let's see here. Where am I at? Dollar yen. Okay, here's the dollar yen. Now, the dollar yen, if you guys, this is my chart of the day last week. And as you know, I have more of a dollar yen, or let's say yen bullish slant. Suga just got the nomination for the LDP, and it looks like he's going to be the next prime minister. So Abenomics, Abe is going to live on as Suganomics. So it's basically no change. Now, obviously, if Suga does not become the next prime minister, then the yen is going to strengthen dramatically. But I think this still, this is going to limit yen strength, but it still looks like the yen wants to lean towards the short side. But right now, you can see the support for the dollar yen comes in at 107.75. Resistance 106.35 roughly. So 106.35, 107. We're getting ready to break out here. And it could happen today. I doubt it, but it could. Range bound. Dollar index, the dollar index, we've broken above this channel. Okay. But we really have to get back above the 94 level to turn bullish. But one of the things about the dollar index is we're holding a multi-year trend line, and relative strength is divergent, or has been, but now we're mid-range. So the dollar really could go anywhere at this stage. We have to get above 94 to turn bullish. So right now it is still bearish. Intraday support. You can see all these lows right through here. If for some reason we get a push lower in the dollar index, the 92.70 should offer support. And let's take a look at the SPOOs. So with the S&P, as you guys know, we had the AB equals CD move, two of them. And it, landed us at the highs perfectly, reversed all the people that didn't, the non-believers of the megaphone pattern. Well, it held. And so now as long as we're below 34, the risk is for 3,400, excuse me, the risk is for lower. You'll notice that the 50-day moving average is holding. Okay. We break through 33, and this is, you heard this in the week ahead video, so nothing new here. But if we break below 3,300, the 200-day moving average comes directly into play. That's what I call the trapdoor trade. We're not going there today, unless something crazy happens. But chances are that's not happening. So, we're probably gonna, I would assume, between now and the FOMC on Wednesday, we're going to be in this range right here. So let's just go ahead and mark that up. 3,300, 3,425. And while we're in this range, just be careful. $3,300 is key support. Whoops. And I'm going to keep this in range too. Okay. While we're below 34.25, we're in a range environment. While we're above 3,300, we're not bearish. We get below 3,300 and I think it turns bearish quickly. All right. So your bias chart is done. So if you guys want, to go ahead and take that and copy it, take a screenshot, whatever you guys normally do. And with that being said, we should have Stelios. Maybe Steve is here. I'm not sure if Steve is back yet. Good morning, Stel.
Good morning. First day of school today, and I think Steve is stuck at the school picking up his son. So,
got it. So, so how are you doing today?
I'm very well, thank you. First day of school for us as well, and see what happens with the kids now mingling with each other. It's going to be fun.
Yeah, I'm my son's been playing soccer or football for the Europeans, for you Europeans, but he's been playing football, soccer for the last month. But it's outside, it's hot here. I struggle with the how people are going to react indoors, especially kids. They have to wear a mask. Are they going to keep on their masks? Or
I think it's easier for a kid to be disciplined if it's older. Mine are 6 and 7. It's very difficult. So
yeah, I agree with that. And look, kids are germ factories. I'm still shaking a cold that I've had since my kid was 3 and he's 13. So, I'm still trying to shake it. Hey, Steve, how you doing?
That's Dale.
Oh, hey, Dale. Yeah. Okay. So yeah, okay. Anyway, so it's going to be interesting for people that don't think that kids aren't, can't pass it around and aren't going to pass it on to their parents. I think that's a little silly. You know what I mean? But both of my best friends have had COVID. Both of my Marine buddies, one of them, he's a mountain of a man, like a marathon runner. He was down for 2 weeks, 15 hours a day he was sleeping. And then the other one who's not so physically strong, he brushed off. He was fine after like 2 days. So I think the way COVID impacts, it's going to impact different people differently. When I saw how it impacted my best friend who's a marathon runner, and he was literally down for 2 weeks. He couldn't get out of bed, slept 15 hours a day. You look at that and go, wow, if that hit somebody that was the way it hit him, if it hit somebody that was 65, I could see how it could kill him, So I think it, viral load or, how potent of a, hit you got, it's going to all impact it. So it's crazy. It's going to be interesting to see how
they're also saying, Blake, athletes that get it, people that get it, the long-term effects have been affecting hearts.
Well, yeah, he got COVID 2 months ago, and he still, whenever I talk to him on the phone, 3 times a week, because he's like my best friend, even though he doesn't live near me. He lives, an hour away. So we don't see each other all the time, but we talk, 2-3 times a week. He's still always clearing his throat. He's like, he still feels winded. And like I said, he's that guy that he could go run a marathon, and then he'll drink a case of beer and then go run another marathon. And he's one of those types of people. He's like an indestructible human being that has really been put on his butt.
Yeah.
So
A lot of people think you get it, you get over it, and that's it. And there've been a lot of they call some of these people long haulers that have major problems even after they've gotten over it.
And sorry, guys, we're kind of talking about COVID right now, but the markets are very quiet right now. And one last thing I'll mention, just because I talked to a friend of mine who's a doctor, she works in admin, and she goes, she what she does is she's a physician for the last 25 years, but she works now on the admin side, with staff and that type of thing. Versus practicing, even though she's still a doctor. The thing she pointed out to me, which I totally didn't think about, she's like, if you get COVID and it doesn't really affect you, that you got to think about what you're as a from an insurance standpoint, and this matters more for us in the United States. From an insurance standpoint, it's going to be pre-existing condition too, which is going to affect your coverage moving forward. So if you got COVID, it might cost more to get coverage because you had COVID, maybe 5 years from now. So that's another thing to think about. And she's like, a lot of people don't think about that, but it's, insurance companies will be taking note of that. So, because you don't know what the long-term effects are, right? Okay. So neither here nor there. I don't know how we got on this conversation, but we should probably revert back
to school. Yeah.
Huh?
From kids in school, we got
kids in school. That's it. Yeah, kids in school. So Stelios, we're heading into FOMC week. It's it's obviously very quiet right at this moment in time. How do you feel about the current environment? How do you feel about stocks, about precious metals, about where we're currently at?
It's a good question. I mean, the FOMC, first of all, I agree with what you said. A lot is being priced in, and a lot of analysts and banks, they're all saying the same thing. The Fed's going to be dovish. They're going to give us more of everything, and dollars goes lower and stocks go higher. I think in the medium term, that's probably right. But in the short term, this market seems to be stalling a little bit. If you look at price action last week, pretty much every day we were up during Asian hours, up less during European hours, and then closed negative quite a few days last week, after New York was closed. So this, for me, shows that there might be a little bit of a shift in the way markets are trading. Everybody now is convinced we are only going to ever go higher in equities. So I still think we should see some kind of correction. Same with metals. I'm an uber bull in metals, but I think we're going to go lower first. What's going to be the trigger? I don't know. But, we're seeing, I was reading about Israel. I think they're going to enforce a 3-week lockdown due to COVID. This thing is still here. It's still with us, and obviously we're learning to live with it. But the effect on the economies and people not working, losing their jobs, that's going to be a little bit more severe or more permanent, let's say, than people think. V-shaped recovery and everything. So I'm a little bit worried. I hope I'm wrong, but I'm a little bit worried about how things are going to go. And the main thing this week, I think, is going to be obviously the FOMC, but also we have the UK, and Prime Minister Boris Johnson is just playing chicken now with the Europeans, and he's trying to amend the withdrawal agreement, which could be, or I think is, illegal. I mean, I don't know. I think the EU might take legal action. I don't know what they're going to do. But Mark Chandler actually put it really well. The comparison to what Boris Johnson is doing. He said it's like he's playing chicken with the Europeans in a car, and he just threw away the steering wheel just to show them how determined he is. So that's a very good comparison. And
yeah, and the guys that I trade with out of Greenwich, they're just last week. They're like, this looks like a what the way Boris Johnson is acting right now, it's like he wants out of the EU. Period. End of story. Doesn't matter. Agreement, no agreement, doesn't matter. My way or the highway, and we get out. That's it. And it's like
that is probably the only way you can actually get a deal with the Europeans. The more time passes, the more I think that this is probably the only way to do it. Theresa May tried for years, nothing happened. So maybe they just want somebody to say, look, I'm crazy. This is what I'm going to do. You're either with me or you're not. And again, who knows, right? I mean, who knows in his brain or in his team's brains what they're thinking? But it's just the way it looks to me.
Yeah, well, what it's done for the cable has definitely hurt it, and so now I'm looking at it. If we get below the 200-day moving average, which it comes in just below last week's lows, that's where it becomes technically problematic. I already think it's bearish that we're below this trend line. But yeah, if the dollar does bounce like later this week, and the cable starts to move below the 200-day moving average, we're probably looking at the low 120s now, and I think that is the risk. So it sounds like Steve is here. Good morning, Steve.
Good morning.
How are you? How was school hell?
Yeah, today it was, a lot of people there. Everybody wanted to take their children in personally, for the first day, even though most kids take the school bus. So, it had a lot of waiting.
Yeah, I know. It's always a disaster the very first few days. Hey, I'm going to let you take over, but I need to mention, guys, if you haven't registered for the Traders Summit event, make sure you do so. I'll put the link in the chat box here. Just you guys have to register because it is live, and even if you're like, oh, I can't listen to it live, so I'll just register later. No, but how about if you get the ability to register to listen live? You want to make sure you have a seat, so make sure you register now. Also, as Dale mentioned too, if you haven't seen that, we have a new pricing offer, and one of the let me just tell you guys what we're going to do is we are going to I think we mentioned this last week. You guys are going to have the opportunity here in the next couple of days to win 1 month, or no, I'm sorry, 3 months of Forex Analytics. It could be one of 3 winners that gets 3 months of Forex Analytics, right, Steve? Is that what we decided?
Yes.
Okay. And 3 winners are going to receive 3 months of Forex Analytics, and then also some, a Forex Analytics T-shirt, a coffee mug, mouse pad, all that fun stuff. Now, the way you're going to be able to win is by retweeting our offer on Twitter. So we're going to, have the offer for that. So you have to retweet. Also, send us direct a message to the Forex Analytics Twitter account saying I want to win or something like that, and you'll be eligible, right? No purchase is necessary. So with that being said, Steve, Stelios, it's all yours. I'm gonna
thank you, Blake.
All right, thanks, guys. Have a great one.
You too, mate.
You too.
So
great band.
What did I miss, guys?
Not much.
Not much.
Yeah, kind of dead zone today.
Okay. Did Stelios already cover all the macro? Okay,
yeah.
Good. Okay, so I'm assuming Blake covered whatever is in the
right
T-chart.
Bias chart, yeah.
Yes, absolutely. Okay, so there is no need to go through that. I'll start from gold, which is part of it, and continue to the rest. So gold is toying around with this trend line resistance once again, so that is definitely something important to pay attention to. 1980 is like the line in the sand. I think that above 1980 in gold, there's going to be a lot of pain coming in for short positions. Having to do with silver, silver is holding on to this trend line support. The equivalent level for silver, I have to say, would be somewhere in the 28, 20 or so. above it, I think we should be looking at a move towards like 32 and a half dollars as the next upside area of interest. So precious metals still looking good. Even platinum seems to be breaking through the recent consolidation. Palladium has broken through this long-term symmetrical triangle trend line resistance, now toying around with this horizontal resistance area. It's also the 61.8 from the all-time high, very, very key level. Above it, I think that Palladium should find itself back to 2500, pretty soon. Copper holding into this ascending channel. I mean, very consistent uptrend. Copper has gone from below $2 in March to above $3 now, which is like a 50% move higher. I mean, it's quite quite an astonishing move within a matter of like, what is it, 4 months or whatever it is. Now, having to do with crude oil, this is the fourth consecutive day that crude oil is consolidating. Even if you have a look at the 4-hour chart, let's pull it up. Here it is. So even if you look at the 4-hour chart, this clearly looks to me like a symmetrical triangle. Let's draw it. So here it is. And given the prior move lower, there is absolutely no reason why you should think this is some type of a bottoming formation. No reason whatsoever. So I think the chances of this getting resolved to the downside are very, very high. We didn't even retrace, by the way, 38.2% of the move lower. So this is a sign of weakness. RSI has been reset. We were at very oversold levels, and now RSI is reset. So I think we should be soon seeing another leg lower. As I've said, my ultimate target is $29. I will be actively looking for long positions from there, but until we get there, there is more pain. Having to do with natural gas, since we are on the 4-hour chart, we can just stick on the 4-hour chart. Having to do with natural gas, I think that this move lower is also corrective here. As we've said, as long as we trade above like 205, implications are bullish, and I do think that natural gas looks good to the upside. We've gotten used to seeing it even doing opposite things than crude oil is doing, so that's not going to be such a big surprise. I mean, trust me, we can see crude oil moving to the downside while natural gas is moving to the downside, or spending more time consolidating the recent explosive move higher. So I think that concludes, having a look at the metals and the energy commodities that we're frequently looking at. I know that we don't have a lot of time, so let me very briefly go through some of your questions. Dale, I'm going to need your help for that because I can see questions that came in before I actually logged in. So you'll have to help me with those. Speaking of the rest, it's a good idea to also have a look at cryptocurrencies. So here's Bitcoin. Now, not very easy to say in advance exactly what type of a move is unfolding here. I would have to say there is a good chance that we're seeing a period of consolidation as well before another leg lower. Ethereum, perhaps a bear flag and one more leg lower left. So as you see, that's how they look. Having confirmed once again recently, though, that they are very well correlated to the stock indices and, of course, to the Nasdaq more so than any of the rest. Admittedly, for them to see more downside, it's very, very likely that we're going to need to see another leg lower in those indices. Now, having to do with them, I've explained multiple times during the past few weeks why I pay more attention to the Nasdaq. And the fact remains that as long as we trade below this broken channels trend line support, previous time we tested it, acted as a resistance, and we got rejected. There is a very good possibility that we're going to see more weakness. Now, clearly, 10,900 has proved to be quite a formidable area of support. It was prior to this an area of resistance. So I do think that, to confirm another leg lower, we do need to see a break below 10,900, in which case I would be looking for 10,250 as the next downside area of interest, and below that, 9,700. 9,700, quite an important level. Don't forget, it was the February high pre-COVID, and before seeing this big move lower, which produced then this amazing explosive move higher. So 9,700 might end up acting as a magnet, but at the same time might act up, as a very, very good area of support. So keep that in mind. Now, Dale, are you with us? Okay, Bitcoin, I just more or less covered Bitcoin. I don't have much else to say. I mean, Bitcoin seems to be consolidating its previous losses, and I wouldn't be surprised if there is one more leg to the downside. Now, having said that, remember one thing here with Bitcoin, because it's quite important. We've had this long-term descending trend line resistance, which we broke through in July. So when we backtest it, so if we do something like this, wherever we end up meeting it, and there's a nice confluence shortly between this trend line and the 200 daily moving average, roughly at 9,100, they might actually act as a very nice area of support. So perhaps we need to see a retest of that confluence before Bitcoin can continue to the upside. At the same time, as I said, if this happens, it's very likely that stock indices are going to be, playing out another leg of weakness. So, that's my best guess of what might happen with cryptocurrencies, because Ethereum looks, extremely, in structure, it looks extremely close. Now, I'm not really paying attention to other cryptocurrencies. I know there are like, tons and tons of them. But we don't cover more than Bitcoin and Ethereum, and personally, I consider then going to like very small tokens and currencies, more of a gambling than anything else. So personally, I wouldn't be looking into trading any other than the two of them. At least they're somewhat more liquid. So that's what I think. Now, having to do with one last thing we can cover, having to do with bonds. Nothing has really changed here with treasuries. I mean, treasuries have really become, a non-market. Having to do with the bonds, this channel seems to be working nicely as support. Keep in mind that we remain in the general context of the larger channel here. So this big structure might prove to be like a larger bullish consolidation, but within this one, I mean, there is a lot of room to be either bearish or bullish. So I think that for the time being, this ascending channel defines, the difference between a, short-term downtrend or a short-term uptrend within the larger channel. So from a risk-reward perspective, as long as this channel's trend line support is holding, long positions seem more favorable. Having said that, yields don't really seem to be eager to move in any direction substantially. So, not an easy play, and that's one of the reasons why USD yen has become, and
range bound.
I don't even know if you can call this range bound anymore. It's a known market, more or less. It's like pegged almost, you know?
Yeah. Like that bond chart looked before
Yeah.
the balloons. Yeah.
So bottom
taking
line,
some
it's
instruments away.
so bottom line, it's really funny. But you know, in the past, Dale, we had so many more FX pairs to trade. But nowadays, you know, most of the time, the difference between trading, let's say, the Aussie USD and the Aussie Yen, symmetrical triangle. And what happened is that the market initially bought the hype that this was a legitimate breakout,
Yeah.
only for that to be reversed. Then other people in the market bought the hype that this was a false break higher, and now this is the real move lower, for that to prove not to be the case. Then we had the opposite thing happening once again, and now we've just started contracting in a different triangle. So who knows? Perhaps when we, you know, when we bridge through this triangle and you know the little bit larger triangle, the market might get enthusiastic once again for a day or two, thinking that it's actually breaking out, and then just form a new pattern of consolidation. Who knows? I mean,
Yeah.
this market is abysmal.
I'm going to ask Howard. Howard's here for our interview.
Okay.
He was very constructive. I couldn't find Peter Goldstein on Twitter. Peter Goodburn, you mean, Hamashu?
Goldstein, he's a guest on our event.
Peter Goldstein?
Yeah.
That's his name, Peter?
I'm not sure about the first name.
Yeah.
Let me confirm. Stephen Goldstein.
Stephen. Oh, yeah. I've heard of him. Okay. All right. So anyway, I'm going to get this thing going with Howard. Howard, I'm going to make you a panelist.
Okay.
Hopefully.
I'm going to stick around until you have everything.
Thanks, Steve. Welcome back, Howard.
How you doing?
Doing good, buddy.
Excellent. Yeah, long time. A lot has happened since we last spoke.
Yeah, you were very constructive. Euro, very bearish. Dollar. What was it, about 2-3 months ago? So
yeah.
Things have moved in the direction of your forecast. If you can share your screen, it's that green box there.
Yeah, let me see. Share screen. 1 sec. Where are we now? Let's see. Share screen. Share. Okay. Can you see it?
Got it.
Cool. Excellent.
Okay, so we're looking at gold right here.
Oh, yeah, was a second ago. Okay. So yeah, as you say, I've been very bearish on the dollar. Broke down quite nicely. Gold up. All the things that should have happened did. Okay. I think we come in at a very opportune time, because you can see this gold Elliott triangle, which I think completed a few days back.
Okay.
So basically, if we were extremely overbought at this point, when we made the apex high, we're very underbought at this point.
Yeah, and only by going sideways.
Yeah, I mean, RSI back then was like 85, 86 or something, 87. We've corrected back, and it's just bumping along the bottom, which is where you'd normally look to buy in a healthy bull market. So oscillator readings, Elliott patterns, all that kind of stuff, all kind of very supportive for gold. So I think we're actually, I'm glad we're doing the call today. You know, we could have been doing it when when gold's making multi-month highs, but I think we're doing it at an opportune time, that the readers, if they're interested, they've got an opportunity here.
Okay, yeah, because it looks like people are already front running the Fed. What are you expecting from the Fed, Howard? Anything?
Oh, do you know what? I'm completely. It's really sort of not my game at all.
Okay, all right.
The more I try and think about this stuff, the more confused I get, and I think the more it misleads me.
Do you have an answer on why the yen has become just almost non-tradable instrument? And the yen crosses used to be great things to trade. My associate was talking about it, and now it's almost like trading at anything against the yen almost the same as trading it against the dollar. You have any explanation for that?
Yeah, no, I think it's just that part of the risk on, risk off thing seems to have gone out of the window for whatever reason. Maybe, people got a bit fed up of playing it and it didn't work, so they've moved on. I don't know.
Okay.
But yeah, I mean, dollar yen is pretty boring. I think it's kind of a little bit like the inverse of this gold chart, that it looks like it's about to break down
Okay.
in line with dollar weakness.
Okay.
Or euro yen is kind of stuck on the upside. It wants to go higher with euro dollar. So you've got that kind of situation where you've got a bit of a divergence with some of these yen crosses. They seem to do their own thing at the moment.
How about the moonshot we had in Euro Pound last week?
Yeah, that was a nice one. That was a nice one. That was I managed to catch some of it. So, but it's a notoriously tough cross to track, I think.
Okay.
A lot of it,
You're
I think,
looking for continuation of euro relative strength over the pound, or it's way overdone in your view?
Yeah, I think the euro is in a sort of a structural bull at the end of the day. We've had this. Where is it now? Let's just go back a little bit. Yeah. So basically, we've just been going sideways with an upside bias. Obviously, last week or two, we've seen this kind of break through to complete this consolidation. So it looks to me to be a euro bull sterling bear type situation. But my kind of strong conviction view is really on US dollar rather than on these crosses. I'm not massively aggressive on the crosses.
Okay. So what's your US dollar look? I remember last time, I mean, you have cycles that take it down dramatically. Are we okay?
Yeah.
So we're not even close to an area where you would see some type of dollar recovery.
Not a sustained
right.
one, no.
Yeah.
I think this is a kind of early stages. I mean, yeah, as you say, last few months we've got the kind of the push down. So the guys that bought the breakout of the previous high from here, they started to bail out. Now it's a kind of like a reappraisal. I think we've got this this big divergent situation which needs to see some more downside. And for me, the whole structure of this rally from 2011 to the recent high, it's the same kind of thing as this 95 to 2000 2001 advance. It's just like a C wave within a flat, irregular flat bear market rally. This is on a mega long-term view, so we're taking some pretty long-term positions here.
Okay.
But so yeah, that's the way I see it, and it seems
do you take partial profits on a campaign trade? I call this a campaign trade because it's a long-term position that's going to take multiple months, maybe years to play out. So wondering if you trade around it or you just stay short and leave it alone and just keep trailing your stops.
Yeah, I mean, well, my actual trading stuff is really short term in nature anyway. So to be fair, a lot of it is not dependent on this multi-year outlook. So this is much more for a kind of a backdrop and for people who are institutions who are looking for where's the next 10 big figures kind of thing.
Would Aussie any of the commodity currencies fit in to the same type of general dollar weaknesses? Do you think Aussie or USD CAD offer opportunities with a weaker dollar ahead, or more muted?
Yeah, no, I'm still very much. I think a lot of it is stock market driven. It seems to a lot of these charts resemble this kind of COVID bear market thing and risk off then risk on type thing. But yeah, it's we've been doing a gradual recovery and pullbacks and typical bull market action. Aussie recently was overbought, come back again to that kind of below 50 or so on the RSI, back into the averages, that sort of thing. Just buy it for the next move up, I think.
Are you looking for a continuation of weak dollar risk on in equities, or will we reach a stage where there'll be a decoupling of a weak dollar and risk.
Yeah, the only thing I see really as a kind of a decouple is the crude, because I think crude, this is S&P future front month. So yeah, nice steady, advance, a bit like the Aussie, I suppose, in some respects. A nice steady advance from the low. Pullbacks looks again to be a little bull market pullback, maybe complete or nearly complete. RSI was overbought, come back into the the buy zone, if you will. So I'm still looking for new highs on stocks. I wouldn't say that there's going to be any massive decoupling at this stage. The crude was one which kind of concerned me a little bit in terms of we're not doing the same kind of stuff as the stock market.
No, we're not.
So that would be the one that I would say maybe perhaps not quite as bullish as the other stuff. A bit of decoupling on that risk on type thing.
How do you work that into I know you're mainly a technician, as most of us are, but how do you rationalize crude being so weak with a weak dollar and risk on? What do you think the problem is here?
Yeah, it might be economy thing. It could be one of those things where people are looking, beyond all the stimulus and tax cuts and everything.
Why would they look past it in crude and not look past it in other instruments?
Because I guess for the things like the stocks, you've got a bit of a put option from the Fed.
Okay.
So you've got some artificial support for the the financials, if you will, whereas something as real and as crude may be a bit more responsive to the real economy. I don't know, but I try not to think too much.
Okay. Do you have any like near-term targets? We peaked in euro about, I think it was a little over 120. What levels do you have coming up here that we should pay attention to in euro?
Yeah. 1 second, let me just get that chart back up now. I think we've probably just done the correction on the euro. Actually, can you see that? Screen sharing.
Yeah. Okay.
Can you see that? Okay.
Yeah.
So move this window away. Is that window blocking?
I know a lot of people were. Yeah, I see the window. A lot of people are looking for like 2170, I believe. That would be 78.6 back from the, I think, the 140 high to the whatever low. Right around near 122.
Yeah. For me, I think as with some of these other markets, you've had that overbought divergence thing where the market tried to make new highs, and we've seen it kind of not be reflected. The market made new highs, and then we saw RSI, for example, make lower highs, lower lows. But again, I think we are now into that ideal kind of buy spot for the next leg up on euro dollar. So I think we could bust 120 on a sustained basis, maybe next week or two. That would be my, along with gold making new highs above, where are we? I think the trigger on gold cash is like 1966.5 or so. So we get a break of 1966.
Yeah, that was last week's high.
Yeah, we get a break of that, then I think we're off to the races on gold. Similarly on euro, 119.20 or so.
Okay. Anything in the emerging market currencies that have grabbed your attention, or you don't even pay attention
to be honest,
to?
I've not really been focused on those ones.
Okay.
So yeah, for me, it's all about the dollar majors, and is the stock market going to make a new high kind of thing. That seems to be the game. But I think my biggest trade right now is long euro dollar and long gold.
Okay. All right. So if people want to follow your work, Howard, I think we've covered most of what you wanted to say today. Am I correct?
Yeah. The only other thing I'd like to mention every time we do talk is this mega long-term system thing, which I follow. Basically, a very simple breakout system which has been working on dollar Europe since 1976.
Wow.
So it's basically a Deutschmark futures going back from
that.
So it's basically a trend breakout type system, uses a couple of inputs, One is like a swing high, swing low indicator, and another one is a Donchian channel. So it's been very reliable on the dollar against the major European counterpart since the 70s, I would say. So euro, it gave a buy at 115 or so here.
Yeah.
Just below 115, 114.95. So this is quite an early young uptrend, in my opinion. We've had a few whipsaws, obviously, back end of last year and early this year. But typically, what it does when it catches some very, very big, multi-month, multi-year moves. In fact.
Okay. So I'm curious, do you do anything that might interest a retail trader? Because I know you manage money. I'm not sure what the kind of credentials you need to be with a money manager like you. I'm sure it's different in Switzerland than it is here. Any services or letter or anything you provide to the retail guy out there?
Yeah, I do some mirror trading through a DupliTrade, a company called DupliTrade. So people can track my systematic trading on a short-term basis. Also, I do a lot of bespoke training one-to-one, because a lot of people they want to learn how to do this themselves. So I do a lot of one-to-one coaching, mentoring. I've even got some fully disclosed systems which I include, which a lot of people like to use. And if they don't use it as 100% of their trading, they'll have it as quite an important input. So there's a lot of things that I do and can do for retail clients.
Okay, and the best way for people to get in touch with you?
Email, so hmfsystems@gmail.com.
Okay, and you're not that active on Twitter, are you? You don't do much there, Howard.
Yeah, I check it out every so often, but I'm not massively active on it. But at break_retrace3, I believe, is my handle. So that could be
Okay, you big bear. pounding down on the U.S. dollar while we're having the most trouble with COVID, and who knows what kind of election we're going to have. Do you think that what's going on is also part of it? Confidence crisis. The U.S. is not looked at the same way in the world it was 4 years ago, and the way we managed COVID and the way we're managing our finances for generations. Do you think that's part of the reason, or could it also be that for the Fed, I know you say it makes your head explode, isn't the dollar the easiest thing to be the sacrificial lamb to generate at least nominal growth and keep the stock market alive, etc., because a stronger dollar is more deflationary? So if the Fed could do anything, it would be more of an invisible type problem, depression, continuing to debase the dollar. Isn't that the easy answer?
Yeah, I think I guess it's, some might say, the last vestige of the scoundrel to devalue your currency. Interestingly, I mean, of course, you've got a lot of competitive devaluation going on as well, so they all play that game. But one thing, some of my workers on this long-term stuff is that for whatever reason, I know we've only got a little time left between now and the election, but typically Republican administrations have seen a net decline in the US unit of at least 15% since Nixon, whereas
Interesting.
Democrats have seen the opposite, flip side to that. Apart from obviously Carter was quite a big deviation on the downside, but that was during the 70s. But Republican administrations, for whatever reason, they like to oversee a decline in the US unit for some strange reason.
Okay, what a great tagline. And again, give me just your best guesstimate, euro price by year end.
By year end, where are we now? We're middle of September. I will go 123.
123. Howard Friend, my trading warrior brother, thanks again for coming and edifying us and updating us with your super bearish dollar view, buddy.
A real pleasure. Lovely, in fact, lovely to do this, Del. And yeah, good luck to all the readers out there, all the viewers.
Thank you, Howard. All
Take
right,
care.
everyone. Take care.
Bye.
Good hunting. And remember, everyone, don't just count your pips, count your blessings. And we'll be back with you tomorrow for Turnaround Tuesday. You're very welcome, Marina. I'll see everyone tomorrow. Adios.